Hi, everybody. Welcome to another edition of Reigniting Small Business. I'm Laura Richards, and I'm here today with Patrick Lee, CEO of Spark Business Institute. Hi, Patrick.
Hello.
How are you today?
I am great. Thank you.
Oh, good. We're about to dive in here to a discussion of the Raise the Wage Act, which Congress has been talking about for a few weeks. We've been hearing about it in the news. And this is the proposal to double the federal minimum wage, or approximately double it in most places to $15 an hour. Main Street's kind of divided on this issue. So what we're going to do is take a deeper look and explore both sides. The federal minimum wage was last raised to $7.25 in 2009. Yeah, pretty crazy. So it's been 12 years since we've had a federal adjustment. Now, states pay different all over the map there, so not everybody is at that federal minimum wage, but still, just over 1 million workers earned wages that were at or below the minimum wage in 2020, according to the Bureau of Labor and Statistics.
Yeah, and there's an argument for and an argument against this increase. And the thing that sort of stands out to me as you were just introducing this thing is in 2009, it was $7.25. I mean, that's even hard to think about. So when we start talking about, $15 an hour minimum wage, that almost sounds more realistic in some ways. But let's start with the arguments against this increase, okay? And so as a small business owner, I think, coming on the heels of the pandemic, right? I think a lot of these small businesses have sort of gotten used to this concept of being afraid, are we even going to last another year? Are we even going to be here? Because that's what the pandemic basically did, is get everybody particularly aware of the fragility of their businesses, right? And you can make the argument this is a particularly bad time for employers to have their labor costs increase by up to 100% without a significant disruption to their business. And there's still a time of uncertainty. We don't know what the new normal really is, and as we're sort of emerging from this, there's a lot of uncertainty, a lot of worry. So if that federal minimum wage moves to $15 an hour, many of these businesses probably aren't going to be able to handle those increased expenses. So, what does that mean? Well, there's going to be some layoffs. There may have to be some automation or outsourcing that could lead to permanent job loss and maybe even some business closures, probably some business closures. According to a CNBC SurveyMonkey small business survey, they're saying that it could result in 1.4 million fewer jobs, with maybe up to a third of small businesses actually anticipating laying off workers. So, you can make the argument in the long run, this is going to settle out. There'll be a rebound with increased prices when the businesses begin to acclimate. But I think that short-term consequence is where we're really having the argument. Wait a minute, we're coming out of COVID. Main Street is all disrupted. We don't know what any of this looks like, and you're going to potentially double our employment rates. It's scary.
Absolutely. You can see that. If all of a sudden we said we're going to double your rent, a lot of businesses would go, whoa, we can't afford that. And labor is one of your biggest expense categories. But let's look at the argument and support. The $15 minimum wage would raise the wages for 27 million Americans. It would lift nearly a million Americans out of poverty, and it would raise the aggregate wages for low-wage workers by over $300 billion in the next 10 years.
Amazing.
Big numbers. So the same survey that you quoted, the CNBC SurveyMonkey Small Business Survey, also said nearly 2/3 of Americans support the wage increase. So very popular. And 40% of those strongly back the proposal. In Florida, voters passed an amendment last November to raise the minimum wage, which is now at $8.56 to $15 by 2026. And this September, it moves to $10. And I think that's what that's showing you is that, there's already areas of the country, and we'll talk more about this as we move on, that are embracing the idea that, wages haven't kept up with the cost of living and there needs to be change. So many of the country's largest companies are already also supporting it. Chipotle came out with something last week saying they're going to pay off their employees starting at $15 an hour. You think about the Walmarts of the world, right? they are in front of it because they have to pay this much to get employees. So,
Yeah.
There's some business forces that are at play in this stuff. So those big companies that are already paying at or near $15 an hour are proponents because they believe it will help worker productivity, reduce turnover, and put money back into the economy.
Yeah. And there's a geographical component to this too. Think about small business owners, say in the Pacific region, Alaska, California, Hawaii, Oregon, Washington, the Mid-Atlantic, New Jersey, New York, Pennsylvania. Those areas are some of the most supportive of that $15 minimum wage. And also some of the most likely to say that they won't have to actually raise wages or lay off workers in order to comply with the proposed change. And the reason for that is they've already moved along this. The market itself is forcing a increase. So maybe there's not a federally mandated number, but if you want to get the type of employees that you need in your business, if you want to attract that talent and you want to keep talent, your wages are higher. I had a postcard, a big postcard, arrive in my mail actually yesterday, and I took note of it because it was I hadn't seen it before. It was such an interesting thing. It was a very nicely done postcard from a farm, and it said, we are X farm, and we are looking to hire and add people to our team. And then in big numbers, it had $17.35 to $20.50 hourly rate, and then it had a little tagline that says, if you're not looking, please pass this on to a neighbor or a friend, right? So you can see how hard they're trying to find this talent, and they're willing to pay. I think small businesses need to think about, the trade-off, right? You're going to have to adjust to this if you want to keep people. We're seeing this now, this whole perceived idea that there's a shortage, and that's debated. I mean, it's not necessarily that there's actually a shortage of labor. There's a lot of studies that are showing that there's a shortage of willing labor because folks have not yet adjusted to making it worth the time of those people to come in and be part of the labor force at that level. So, small businesses may need to start thinking about, okay, we're going to have to do this. So how do we decrease other costs, or how do we increase our costs? Do we have to eliminate positions? Do we have to cut employee hours? Do we have to reduce benefits? Do we have to outsource some? What does that look like? And maybe it doesn't have to be done in a negative way. Maybe it doesn't have to be, oh my gosh, this is going to make us go here. Maybe it has to be a reassessment of how best to utilize our workforce.
Yeah, absolutely. I think one thing it's important to think about, and one of the things small businesses are probably focused on as well, is, for businesses to attract and retain the employees, think about it. If their starting wage is $15 an hour, how much now do they have to pay their shift worker? How much then do they have to pay their manager? How much then? So it drives wages up across the board. And so I think it's a bigger issue. But as we've talked on other podcasts, there has been a chasm growing between these hourly wage, group of people and salary professionals for a really long time. So in my mind, this wage increase is necessary to address that and to bring people up out of poverty who are working a 40-hour work week. People are talking about, well, no one wants to work because they're getting all this money from the government. What do you say to that, Patrick?
Well, I actually, there are absolutely some outliers out there who are happy to not work and be on the federal dole, right? We know that exists. But I am not a big believer in the idea that there's a whole bunch of lazy people out there who just don't want to work. What I'm actually saying is I think there's a whole lot of savvy people out there who are going, okay, I'm being paid more to stay home than to go into work. And if the people that want me to come into work aren't going to pay me, why would I do it? I mean, that's just savvy. And I think there's a whole lot of people, even once that unemployment and all that sort of disappears, there's a whole bunch of people who are like, they want me to come in and work a 40 to 50 hour week to make this amount. when I can work a 20-hour week and cover my nut, right? And not have to be working 40 to 50 hours and be in that kind of pain. It's a lifestyle choice. So employers got to catch up with this idea. If you want the talent, you're going to have to adjust your business model to attract that talent.
Absolutely. So proponents of the wage increase also say it will do exactly what we just said. It's going to return low wage workers to a standard of living considered the bare minimum decades ago,
Right.
and turn back the erosion of the value of the minimum wage after inflation. So I'm about to tell you some numbers that are going to blow your mind, some historical numbers about the minimum wage. So those making the federal minimum wage today make 30% less in inflation adjusted pay than the federal minimum wage workers did 53 years ago. So, according to a senior economist at the Economic Policy Institute in Washington, D.C., if the minimum wage had kept pace with labor productivity since 1968, the minimum wage would have been $21.69 in 2020 and would be $23.53 in 2025. So, we're a far cry trying to get to $15 from where we would have to be to make us the same as 53 years ago if we were an hourly worker.
Yeah. And remember the Raise the Wage Act indexes the minimum wage to median wages. Okay, by simply establishing regular, predictable increases to the minimum wage that are linked to overall wage growth. So this proposed legislation will improve the ability of the minimum wage to reduce inequality. So if we're talking about, as a country, the fact that massive gap between the wealthy and the not wealthy that has been growing and growing and growing to the point where a lot of sociologists and economists and others are saying this is endangering our entire system. If that is a concern of ours, then the idea that we're just simply going to raise that indexed number, right,
Yeah.
to reverse decades of growing pay inequality, to a level and to a system that would prevent any future growth in the gap, that makes a lot of sense. And it makes a lot of sense in a lot of ways, because if we're still a consumer economy, we've got to provide the folks who are going to consume with resources to do that. Because we all know that when the wealth tends to go up to the top, they just accumulate it. They're not spending it. So some of that's got to be spent by these folks down here. So I look at it and I'm saying, we haven't had a minimum wage increase since 2009. These predictable increases are probably warranted, and they probably wouldn't be as painful if we just kept up with them. So a couple of things that stand out to me here. One is, I think small businesses and Main Street have lost their way a little. It used to be that they were leading the wage index, right? They were providing better wages and better earnings for these type of workers, right? You could get a better wage going and working for Clements Hardware in your local town than you're going to work for Walmart. So it's a little bit scary that we see this massive shift right now where the Walmarts and Chipotles and these big people are already endorsing this. So what does that mean? That means they're stealing talent. Nobody wanted to work at a Walmart or McDonald's, right? Let me go get a job on Main Street. Well, they're stealing that talent now because they're willing to acknowledge this is what you got to pay to get this. And Main Street's screaming, "Oh my gosh, you're going to bankrupt us." This is not a battle that Main Street should want to lose. They should want to keep that talent. That's the one thing they can get, right? Keep that talent and be the leader in this. So this is one of those very kind of crazy debates, because I sit with small business owners who go, if they do this, what's going to happen? And you sat in that position. So I understand the fear, but I think there's a couple of pieces missing here.
Yeah, a couple things come to mind when we're having this discussion. One of them is my thoughts of my teenagerdom when I worked for minimum wage. I think there was a time where, teenagers, first job holders made up a lot of the people who were on minimum wage. The
Mhm.
fact that we have whole families trying to exist on minimum wage now, that's just a fact. So, I like that the idea of actually providing a wage that's a living wage. I don't even know if $15 an hour, would put somebody above the poverty line. I haven't done that much of a deep dive. My guess is it's the bare minimum, at best. But we got to start somewhere. And if that means that people have to pay more to have the experiences they're having, then, I think it will all kind of zhuzh out. What's your thought?
I love the word "zhuzh." Thank you. I never knew that word till you told me it. But I think small businesses don't recognize their own resilience. They are so used to rolling with these big waves that they are too small of a boat to supposedly be on the water, but the wave comes through and they all rebound and they're resilient and all. And I think there's a whole lot of things to think about here. One is, if you pay more and you get better talent, does that better talent actually make up for the fact that maybe instead of 10 people on your staff, you now have 7? If that's 7 of more talented, more productive, more reliable, does that make up for the 3 extra unreliables that were there, right? And the fear of change, it's there, but the small businesses have been dealing with that now nonstop, since 2008. Honestly, I mean, we've watched the Great Recession, then we watched the weird recovery, then we've got the COVID-19 pandemic, and I think they may not be as confident in their resilience as maybe they should be. Now, here's the issue with that. Going back to the other side of this argument. Okay, that's probably very true for a lot of Main Street, Patrick. Thank you so much for pointing it out. But some of these industries that have been particularly hit hard by the pandemic are ones that depend more on this lower wage thing. Think the fast food, restaurant, shift work type stuff. And I do understand that. I can see that, but I just don't think this is sustainable. I don't think we can just keep doing this forever.
I agree. And I think now's the time to be talking about it. Even if the Wage Act does not pass, and get affirmed on a federal basis, I think it's already put the pressure on companies to take a look at what they're doing. And we know that because we've seen press releases going out about companies already moving to $15 an hour. So I think the questions for small business to ask themselves is, which side of this do you want to be on? It's a hiring competition right now. People are looking for staff. Get on the right side of this thing, get the right people, and look for how to improve your bottom line in other ways.
Now, I think that's absolutely true, and I think that's a great call out to what I would say is the majority of Main Street. But I am going to point out here the one area where this gets a little dicey, and I don't pretend to have a good answer, but I feel the pain. When we're looking at certain areas of the country that typically have a little bit more robust economy, the standard of living is a little bit higher there, and this all makes perfect sense. But we know there's a whole bunch, and we'll call it middle America because folks are always talking about that, but it's not the San Francisco, Chicago's, or Seattle's, right? It's the smaller towns in the Midwest, maybe the South. I mean, I'm stereotyping here, but it's that more rural community, and their standard of living was never at a level that completely outpaced the minimum wage to begin with. So you end up in that weird situation where the federal mandate, yes, it establishes a certain level, but it does put certain communities, I think, at a disadvantage. And how that needs to be sort of worked through, I'm not sure what that looks like, and that gives me a little bit of pause. But it doesn't stop me from saying this is coming.
Yeah. Well, interesting that you said that too, Patrick, because wouldn't you think in those same small communities, they need those dollars? Well, to circle back into their economies as well.
And it's not just the dollars. Let's be honest. Half of the plight of a lot of those small towns is that they can't keep certain people. They can't keep their young people in town, right? They're leaving for better opportunity. They can't do that. So the idea that, by holding down that wage to sort of help them out, well, guess what? we already established that the coasts are already paying more. So they're leaving anyway. So you understand the fear, but there isn't an answer in there. It doesn't solve their issue. There has to be a recreation, like we're always talking about, of Main Street communities and how they function so that those areas have thriving local economies, even if they don't attract the big companies and all that. And that's what we're all about anyway. We're advocating for that economic model.
Absolutely, 100%. All right, guys. Well, you've spent another 20 minutes with Spark Business Institute. This is the Reigniting Small Business podcast. Thanks for being here today, and we will see you next week.
Bye, everybody.
Bye-bye.